The recent dip in the markets, along with the fall in gold and silver prices, could present a buying opportunity for those wishing to invest for the longer term. Some pundits are saying this drop could present a suitable time to start buying for investors who are patient enough to hold their investment for a while. Specific to gold, bullion prices have fallen from a high of $2,064 a troy ounce to $1,861 a troy ounce recently. And silver also dipped, falling from $29 a troy ounce to $23 a troy ounce recently. When we take a look at the major indices, this dip does not present a good buying opportunity to me, as we've discussed. Although I believe that gold and silver prices will likely recover and rise in the future, it's not quite time to buy the dip in gold and silver either. However, I am buying the dip in oil. To me, the dip for oil is different than the dip for the major indices, which are different than the dip for gold. Also, my holdings period for oil could be short, or I'm prepared to hold for years if needed, since I'm getting a dividend over 7%. So, let's take a look at all of the charts to see if it's time to buy the dip. Today we're going to look at several charts, so we'll go quickly. And I'm looking at the 3-year weekly. All of these charts are going to be 3-year weekly, beginning here with the Dow, the diamonds, or the symbol DIA. As you can see here, the bottom all the way up to that top. We've come down here and we've hit that 20 EMA, and it looks like we may get that reflection that I've been talking about for some time. Here, you're not going to see much there in volume. Into the MAC, you can see that the MAC fast line is relatively shallow, still above the slow line, should give us that reflection. Now, it's not guaranteed, but I think that's the probability. The histogram's pretty steep, but we still have room for a reflection. Price rate of change looks like we're getting a bounce off of that zero line, and that may continue on up. Relative strength, same thing, the bounce off of that 50 line. Hopefully we'll continue up to give us that reflection. Not much of an indication by the stochastics, a little bit of a turn in the fast line, but that's not going to be all that helpful. And then here, Williams, a little bit fishhook here. We need to carry on up to get that reflection. So maybe a mixed bag, but some of them are indicating perhaps the early stages of a reflection. Now, back up to the price chart. Is that reflection? Is that motive enough to buy this dip? I don't think so, because it's a danger zone all the way up to this point here, that recent high, and then higher to the all-time high in early 2020. There's danger all the way up. Don't do it. Let's go to the next chart. And now to the 3-year weekly on the spiders. Pretty much the same thing as the Dow. We have a little bit difference of a high there in early 2020. The all-time high was at this point, but still came on down, bounced off of that 20 EMA. We're getting a reflection, at least the early stages of that. You can see that the MAC is a little bit closer with the fast line and the slow line, but I still think we can get that reflection off the top here. Into the price rate of change, much the same as the Dow. Same thing with the RSI, stochastic, and the Williams. So early stages of a possible reflection, and in my mind, that is not motive enough to buy that dip, because danger zone all the way up to this point here. Let's go to the next chart. And looking at the 3-year weekly using the Fidelity NASDAQ Composite Index tracking stock, or the 1Q, you can see here, again, the top at that point there, a bounce off the 20 EMA on up here, getting a little bit of reflection. But in my mind, this is probably the most dangerous of them all. As you can see here, the MAC is well up to this level here, 20.35 and 21.24. That's very high. The fast line has already come through the slow line, so the odds of a reflection are still possible, but I think the probability is lower. Things are going negative in my mind. It just doesn't look like this has the power to do a very reasonable reflection, and it doesn't give you enough room to do any buying with any hopes of good profits. It just doesn't seem to be there. We do have a nice RSI reflection, but a lot of these other oscillators are pretty weak. The stochastic's a little bit of a turn, and the Williams is below that 50-year midline. It's possible we can get that reflection, but what scares me the most is simply the height of this move. Stock market gravity is going to take hold of this and pull this down, in my humble opinion. I would stay away from that. Okay, and we're done with the major indices. So let's now take a look at gold and see how that is a little bit different. I'm using the Spiders Gold Trust, as simple as GLD. I do not hold any shares of GLD at this time, and this is the 3-year weekly. And you can see at this bottom here, we've had a nice move all the way up here. Now you can watch the cycles here, the movements in the up and down, on its way up, and it's very nice. And we just happen to be in a downtrend right now, so take your time, be patient. And you can even see the cycles in the volume as it heads on up. Nice, and we're in a downtrend. Same thing if you take a look at the MAC. Nice move on up. Now with a fast line coming through the slow line, we're just in a downtrend. So let's just wait and watch and see what this looks like. It's going to take perhaps a few months before it bottoms. That's a potential expectation, but I think that we're in this downtrend, so just sit on the sidelines. Again, histogram, nice waves. You see the waves there in the price rate of change, also in the relative strength, and then in the stochastics. And a lot of these, you can see that these waves have higher lows. That's a very strong. So I would expect this stochastic move to come in someplace around the 50-year midline. We'll see, but that's my expectation. This is not perhaps going to be lower, or excuse me, higher than this low, but as long as it's within reach of that midline or 50 line, it's going to have a pretty strong rebound. But that is going to take some time. You can see the same thing there in the Williams. Back up to the price chart. Again, the gold, much better than the major indices, but now is time to just be patient. And this last chart here is a SPDR select sector fund, the energy select sector, and the symbol is XLE. For disclosure purposes, I do hold shares in XLE, and I've been buying the last few weeks, and I'm going to continue to buy here. Now, we had that bottom there in March with that move up to that point, and then we're in a downtrend here, somewhere around $30 a share. As you can come and see here, volume was very high, certainly in that sell-off. Into the MAC, we came all the way down to that level here. We had a pretty good bounce going up to here, and to me, the fast line is going to be a shallow descent here. And so hopefully it is going to bottom well above that bottom here. And that is a favorable characteristic in my opinion. And that also shows up here in the histogram. This is going to bottom out much higher than this there. Same thing in price rate of change as well, relative strength. Now, they are just starting to bottom. Some of these are starting to bottom. So it's a little bit of a mixed bag, but some of them have a little bit better bottom than others, such as stochastics. Hopefully, this is going to create a bottom much like it did here and say several of these others down at these levels here. That's what I'm expecting, but I can hold through if it continues to trundle along the bottom. But to me, these look like nice bottoms. I'm not saying that you should buy. I'm saying that I've been buying, and my holding period can last for years. It doesn't really matter to me. This is not a huge portion of my portfolio. I just seem to think that oil is not done in this world economy, and it will come back, and I will be there collecting over 7% interest. So that's why I'm buying this dip in oil. I'm not buying any of the other dips at this time. I'm going to wait and watch and see. And that's what I suggest you do too. And for today, that's ChewDog Charts. Thank you.